My name is David Walker. I'm the president of Heartland Insurance Agency in Heartland, Michigan. And so, the topic today is one of my, one of that's, very important to me, and one that I've worked with Risk and Insurance Education Alliance putting together for the CIC program, but that's the issue of ethics. And ethics is one of those things that, ironically, is not always easy to teach, simply because a lot of this comes organically from your background, from how you grew up, about where you grew up, all those kinds of things. And there are so many other factors that will impact and influence your ethical behavior, right? And so certainly when we teach the modules, we walk through a number of those things that, talks the myriad of different outside influences that can impact your ethical behavior. But in this industry, it is so vitally important for a couple of different reasons, right? Now, number one is because we operate in an industry that works under the construct of something called uberames fides, if you hear legal tacticians talk about these kind of things. But it's a Latin phrase for utmost good faith. And there's an expectation that when you're dealing with a consumer in these situations, that they operate under this construct of uberame fides, or utmost good faith. And what that says then is that you're acting, when you're acting as a professional in the insurance industry, you're acting in that capacity of utmost good faith. That is to say, the consumer has an expectation that the things you're telling them are both truthful and factual, and that's when we get into this blending at times between ethics and errors and omissions, right? Because a lot of times these things will be kind of smashed together. Now, obviously they're not a synonym. Certainly they are not synonymous. They are kind of cohabitating in the same space. Ethics is different than errors and omissions in as much as the law is different than ethical behavior. Think of it this way. I can do something that is perfectly legal. I've violated no statutory law, but that everybody could agree probably conclusively that it's unethical behavior, right? And so I can do something that's perfectly legal, but you would all agree is perfectly unethical, right? And so this is where that it starts to blend back and forth. Most of us will, generally speaking, get their ethical direction or their ethical guidance from, just like I said earlier, a lot of their background, but also from the standpoint of in the organization that you're working in, a lot of that will come from the top down. This is one of those times that ethical behavior has to come or has to radiate from the top down. Think of it this way. If the owners of the agency or the lead management of the company, if they're not acting in an ethical basis with both consumers and the insurance companies, then obviously the people below them will not feel any reason for them to act ethically, right? So the point is, this is not something that generally percolates from below. It has to radiate down from above. And so when you're working for somebody, there should be an expectation that the people you're working for are acting ethically, both in the dealing with a consumer and obviously with the insurance companies. When we look at that ethical behavior, remember that radiates outside the industry and inside the industry. So think of it this way. If you think about it, this is a very little bit. You have an ethical brand, right, for lack of a better term. You have an ethical brand that exists in two different places, right? One of those ethical brands resides in the marketplace when you're selling to consumers, right? People want to know that they're dealing with an agency that has a high ethical standard, that when they go to them, they're going to be treated fairly, they're going to be treated in a manner that is treating them the same as everybody else. And as a result of that, you get a nameplate or a brand in the marketplace that you have a high ethical standard. So by way of example, I've seen this a couple times, even in the last couple of years. Are there times when we'll be faced with a prospect and our best advice to them is to stay exactly where they're at? And the simple answer is yes. And ironically enough, we've actually had people refer, the people that we didn't write, refer other people to them, saying, look, you can go ahead and call these guys because they're going to give you a straight answer as to whether they can or can't help you, whether this is where you should stay or you shouldn't stay. But I can give you examples, 2 or 3 in the last 2 or 3 years that we've said, yeah, while we can help you, we can't improve this and that, and realistically, you're probably where you should be, and you really shouldn't stay, and you shouldn't jeopardize your coverage, especially in a hard market like it is today. Now, that's one kind of an ethical brand that you have that exists in the marketplace. Candidly, the other one on a parallel track is you also have an ethical brand within the industry. That is to say, how do you deal with not only regulators, right, at the state level, but also how do you deal with insurance companies? Certainly insurance companies, number one, are looking at your ethical behavior on a regular and ongoing basis. Are you dealing fairly with them? Are you providing them all the correct information? Are you disclosing things that they should know or that they should be aware of? Those types of things. And certainly there are things that go beyond the boundaries of contractual obligations to outside that, to the point of, is it ethical from the standpoint of dealing with that insurance company, right? And certainly you've all seen examples of this, and certainly within the industry, you can name probably within your geographic area agencies that you know that have the brand, right, of not dealing ethically with insurance companies. Now, the one thing, the cautionary tale I always tell people that own insurance agencies is, if you don't think that insurance companies talk to each other, you're being very naive. Remember that in a lot of cases, a lot of the upper management and the field reps and all those folks, they move from carrier to carrier. And when they move from carrier to carrier, they bring history and legacy with them. Plus, they leave behind friends that are in those areas. And if they're coming to your state, by way of example, saying, hey, we're thinking about looking at appointments in the state because we're going to enter, pick whatever state it is, are there any agents that you recommend we talk to? And are there any agents that you recommend that we not talk to? Now, aside from productivity, say production and volume, and loss ratio, and claims experience, one of the factors I can assure you, even though it may be somewhat subtle and nuanced, one of those factors that those insurance carriers are sharing between each other, whether it's in an informal or formal, is the ethical behavior of that agency. And they're saying, yeah, you might want to steer clear of them. And while it may have nothing to do with production, it may have nothing to do with loss experience, it may have everything to do with their ethical behavior and how they treat and deal with insurance carriers on an ongoing basis. So always kind of keep in mind that when we're talking about ethics from that perspective, there are two parallel ethical buckets, as it were, inside, in the common marketplace, and then kind of inside the marketplace that's in the insurance industry side of it. And these are two things that you have to be very careful to manage. And the reason I say that you have to be careful to manage them is this becomes the discussion of reputational risk, right? You want the reputation of being a good, professional, and ethical agency in both of those marketplaces. If not, you are risking the reputation of that organization. And the impact or the effect of that can radiate out in a number of different ways. Even if you set aside, for example, the issue of the fact that you want to be considered one of those agencies that are there, and certainly if you're doing everything right, you're going to be considered one of those professional ethical agencies. But it can even migrate over to things like the value of the organization. So by way of example, if somebody perceives in the marketplace that there is a low ethical standard in that book of business, and that's to say you're not protecting the company and you're not really dealing fairly with the consumer, if somebody were to look at the value of that agency to buy, they would say, well, wait a minute, if I'm going to buy this agency and I know what the ethical background is, I may have to re-underwrite that entire book. Well, now the value that they're willing to pay you for that asset goes from here to here, simply because they know that the cost associated with obtaining and retaining that book and the possibility that there may be other issues in there is just going to change the value of that organization. Conversely, if you've got an agency with a high ethical standard, high level of professionalism, and they know how they're treated both the company side and the consumer side, suddenly then that value is like, ooh, we know that this book of business is strong. We know what we're told is going to be fair and accurate. We know that we're not buying something that's going to create problems for us, right? And the way I always look at it is this. There's a great book a few years ago written by Franklin Covey called Business at the Speed of Trust. And it's talking very specifically about ethics. And what it's really talking about in that book, Business at the Speed of Trust, is that it's talking about the fact that all business transactions, if you think about it, this makes a lot of sense. All business transactions will speed up or slow down based upon the level of trust or ethical behavior, right? So if you have a high degree of trust, that is a very simple and very easy transaction. You know that what you're getting is exactly what they're telling you, and you can move forward very quickly, very rapidly with that high degree of trust. If there's a low degree of trust, a low level of trust, then that slows that process down, because now when you're looking at that transaction, you have a much higher rate or a higher degree of due diligence that you have to do to confirm that this is factual, to make certain that what we're being told is the truth. And so if I have a high degree of trust, high ethical standards, very quick transaction. Low trust, low ethical standards, it will absolutely slow down that process, and it may be the deal breaker for that transaction. So always remember that ethics is in a myriad of ways of how it impacts both how you do business, how you're thought of in the industry, and how your structure going forward can impact even the value of your organization from the standpoint of maintaining a high ethical standard.